Welcome back, everybody, to another episode of the Pursuit of Purpose podcast. Today, I am with Anthony Walker. He is a partner in Cornerstone Commercial Investments. They are currently building 121 multifamily apartment units and in the process of raising funds for 68 units and another 300 plus in their pipeline. And he's doing all this while also being the co-owner of Northwest Real Estate Team, which specializes in luxury and residential homes in northern Idaho and eastern Washington. And this year, correct me if I'm wrong, you are on track to hit 40 million and in only your second year of business, right, Anthony?
That's correct. Yeah. So we have me and my business partner, John Nichols. He focuses on commercial. I focus on luxury. And then we have Tessa, our buyer's agent, who kind of focuses on the residential, kind of, the not as luxury, but she does a phenomenal job. And then we have a full-time assistant and transaction coordinator as well.
That's awesome. So what I'm most interested in is give me the 2-minute bio on how Anthony Walker quickly, from my perspective and what I know about you, got to where you are right now in your real estate career.
Yeah, so I graduated college in 2019, so I got a degree in finance and marketing, and I read books and was obsessed with real estate, but I was like, you know what, I'm going to get a job and kind of work up the ladder, make good money, and just invest in real estate on the side. 6 months into that, I was like, I'm not working for anyone. I'm going to work for myself. I'm going to start my own business. So I quit that and didn't really have a clear direction of what I was going to do. So I took about, I'd say, 2 months to really figure out what I wanted to do. I actually worked for someone for free for those 2 months, just learning about how he did real estate. And then I learned that being a real estate agent, might be a good way to, you get 3% commission. That'll help me get some funds to buy rentals, and started getting my license. So fast forward, I got my license in about January 2020, sold 4 houses, and then COVID happened. A little bit of a lull in the market, and then quickly gained traction again, and ended that year just over 10 million in sales just by myself. And I did that, through persistence and really working hard, not really my sphere, but just kind of working hard and kind of marketing well. And that brought me to the top top 10% Coldwell Banker Global. And then in January, I kind of started partnering with John Moore, and then in April, we really founded the Inland Northwest Real Estate Team, and our focus is to be a one place, stop and shop place for luxury, commercial, and residential. And then while doing that, John, he's also my business partner in Cornerstone Commercial, and then his dad, also named John, were doing some apartment stuff, and I was obsessed with it. So they quickly learned how much value that I can add, so we all partnered. And Cornerstone Commercial Investments is our company there. While I was, beginning of this year, I was helping them raise funds for a 53-unit project over in Post Falls. And I did a lot of that without getting equity, just really wanted to learn the business. John's dad, our third business partner, was in commercial lending for about 25 years and really understood the business. So I joined them, and now fast forward, we raised funds for multiple different projects. Like we mentioned, we're building 121 units right now. We have 68 that we're currently raising $6.8 million for. And then we have about 300 plus in various markets across the West that we are going to start raising funds for. Pretty much all of next year, we're going to be raising money.
So I just am like, wow, there's a lot of stuff going on. The first thing that I want to touch on is that, so jumping into this new career for you, I feel like I know a handful of real estate agents that are, it seems like everybody is jumping in and becoming a real estate agent, but there are several people that I know that have had early success. And then there are several other people that I know that kind of jumped in, and it's a much, much slower ramp up. I'm curious, what would you say? It sounds like you mentioned you worked really hard and marketing well. What would you attribute doing $10 million in literally your first year as a real estate agent, correct? Work at Coldwell Banker?
Yeah, first year, and I got up to the top 10% and got Rookie of the Year in our office here. What I would attribute my success to is hard work and also kind of past experience. So when I was young, I wanted to make money. So I was selling popcorn with the Boy Scouts when I was, 11, 12 years old, door knocking. I was like, how much money can I make in this? Fast forward to college, I found a little niche. I was learned how to fix cars and I flipped them. So really, I got some sales experience there, but then hard work and kind of understood the commission base. So I became a licensed agent. I was like, okay, how can I make money quickly? And I felt like the low apple on the tree was going for sale by owners. So I was really successful at for sale by owners, and I got 2 of them within the first couple months. And then I got a buyer, and then I got just like kind of a random seller. That was just putting my name out there, whether it was Facebook advertising or online advertising. But that wasn't really it. It was really just working really hard. And then I can get on anyone's level. So whether I'm selling a trailer park or I'm selling a $10 million house or an apartment building, I can get on those people's level, even if I'm not like my first deal. I would tell them, I've been obsessed with real estate. This is my first deal, but I just got them to really believe in me, and that's part of sales that you learn through either experience or it's just kind of a gift. But it's really attributing to that, and then working hard. I'd get here at 6 a.m. and I'd leave at 6 p.m. Go have dinner and work a little bit more.
On that in particular, what is like? I know a lot of people that are working all the time, but they have nothing to show for it. What were you actually doing? Is this like, did you do cold calling? Did you have like good warm prospects? Were you really good at networking? You mentioned like some Facebook stuff. And obviously you have a marketing background. I'm curious, is there any like if I told someone, like my brother's in lumber sales, but if I was like, Joe, you should go into real estate, here's what you need to do. 3 things do every day or whatever. Do you have any like tactical, like you need to put in the time, but what are you doing during that time?
Yeah. So when I first started, and still to this day, it's, I think the biggest thing is brand awareness. The second biggest thing is getting your work done. And the third biggest thing is really understanding a contract and, being someone that someone can go to and ask questions about the contract. So that takes a little bit of study in that third part. But the biggest thing for me was brand awareness. So, I talk about Facebook advertising and stuff, but really a lot of leads from digital, especially Facebook, Instagram, and the social medias. A lot of them, I'd say 99.9% of them are just going to go on there. They don't like you, but if they see you over and over and over, kind of a principle in marketing and digital advertising in general is you need 7 to 9 touches before you become like a brand that someone really understands or a name that someone can remember. But in my opinion, since the world is so decentralized, there's Facebook, Instagram, there's so many different ways to market now. I really think it's 20 plus times that someone needs to see your face. So I was trying to be on Instagram, Facebook. People would see me. I did get one of my first leads through Facebook that bought a house. And then follow up. You have to follow up. So if you get a billion leads, but you don't call them or you don't text them or email them, they mean nothing. So every single time I'd get a lead, every single day I'd look at, I got 10 leads yesterday. I'd call them. 9 out of 10 were probably no good, but that one person was good, and I put them in my, kept them in a separate database, and I'd follow up with them, and I'd set them up on a drip campaign for listings that were going to hit the market, and then I'd communicate with them, which was also super important, and then just working hard, understand the contract, like I said, was just reading through it, writing offers for people, even though they weren't going to get accepted, and just really understanding that market. And then cold calling you talked about, I did that, but pretty much only did that for sale by owners and a few for rent by owners. And again, it's a numbers game in there as well. 9 out of 10 of them or, maybe 19 out of 20 of them are going to be no good, and some other agent's going to get them, or they do sell them on their own. But if you get 1 out of 20, there's a few hundred listed a year, and that's what I did. I think I got 10 listings my first year.
For sale by owners? Wow, that's awesome.
Yep.
Which
it's actually trailed off quite a bit.
Yeah, because
Go ahead.
I'm just curious. I'd like to. I am an admirer and appreciator of sales skills. So just for fun, let's pretend that you're calling me. I have my house for sale by owner. I'm sure you got pretty good at just like your opening word track. We don't have to go deep into this role play, but I'm wondering, like, what would you say if you're calling me? Like, hello, who's calling?
Yeah, no, I'd call and be like, hey, this is Anthony. I'm just calling about your home on so-and-so. And be like, oh, yeah, is it still available? Awesome. Well, are you open to working with real estate agents? And, most of the time, they're like, we're open if you bring us a buyer. We're not going to list it. Okay, well, I do have a bunch of buyers. I'd love to, tell my buyers about it if you give me permission. I'd like to send it out kind of as a listing. And they're like, oh, yeah, no problem. Like, okay, well, what are you willing to offer? And they'd be like, we'll offer 2% or 3%. Like, okay, perfect. That's what I like to hear. Well, a lot of my buyers are actually virtual. So would you mind if I actually come and did a video walkthrough of it? I would just get my iPhone and I'd literally go there and do a video walkthrough, and that would be the best way. I'd get it face to face, and I wasn't lying to them. I have a whole pipeline of people that are looking for houses. And so I would do the video and I'd chat with them, and in person doesn't matter what anyone says, in person is the best way to sell anything. If you're emailing someone, texting them, calling them, it does not beat out in person. So I would get in front of them in any way possible if they would allow me to. So I'd go there, I'd walk through, I'd do a video, I'd chat with them, and then, I'd continue to chat with them, like, it's a good idea to list this property. You're already going to spend 3. I think we could bump up the price a little bit. It's going to cover the additional, 3%. And I got a lot that way, just right there. They'd be like, you know what, Anthony, I'm tired of showing people this. I understand your expertise. Like, let's go for it. Or I'd go home, I'd send that video to people, and I'd actually show the property. And, sometimes it wouldn't pan out, but sometimes I'd show it, to someone in person. They wouldn't buy it. But then that for sale by owner person would give me a call, like, Anthony, you're a hard worker. I want to list it with you. Like, I saw that and I'm impressed. So
that's awesome. I feel like I love like, I would call it hacking, but in like the new hacking, the good hacking of just like, what are the things in the systems that you can put in place? And from what I'm gathering, it's like you identified that getting in person with the customer was critical. And then once you're there, now it's just like, I've always kind of felt the same way. It's like with job interviews or whatever, it's like, let me meet you, and then I will, like with clients trying to bring people on board, it's like, let's talk. And once you get to know me, we build rapport quickly. The chances of success in that relationship just drastically improve.
Absolutely.
That's awesome.
And you're going to see their body language is just as important as word of mouth. I mean, it's body language speaks volumes. So if you're a kind, trusting person and they can feel that when they're talking to you in person, it's a winner. And so that's what I did.
That's awesome. So what is most interesting or exciting about real estate specifically for you?
Yeah, the reason I quit my job, and I think the reason a lot of people are drawn toward real estate, I'm no different, is the idea that it can bring you financial freedom. So I can, help people, which I love. It makes me excited helping people find their home, helping whether it's luxury or residential. We're bringing people new homes. I absolutely love that. Or selling their home and they get to move to a new place or buy a new home. Love that. But really, I mean, what really draws me is the idea that anyone can become financially free through real estate if they work hard and they invest their money. So, whether you need to replace $5,000 a month or $10,000 a month, you can do that by investing in rentals, commercial property, multifamily, and become financially free. And then, in my opinion, once you're financially free, you can really do anything you want. If you want to travel, if you want to take a month off and sit on a beach, you can do that because you can pay your bills and you can afford that lifestyle. So to me, that just excites me and that drives me every day, is moving toward that financially free goal.
And so with financial freedom, I would define that as you have the option to not work, right? You've determined whatever your house or your groceries, gas, utilities, all your daily, monthly bills, you have those covered.
Exactly.
Correct?
Exactly. And a lot of people think of it as like, okay, what's the cheapest I can live on or replace that? So I need $30,000 a year. And to me, I think that's a terrible way to look at it, because I want a nice lifestyle. So to me, financial freedom is going to afford, travel. It's going to afford my house and the location that I want it. It's going to afford the car that I want. It's going to afford, me going out with my friends and having dinner and really living the exact lifestyle I want to. So to me, I'm not financially free until I achieve that. Not just the expenses. A lot of people think, in the FIRE movement is what a lot of people call it. They just want to get financially free and then they want to go live off, get their house paid off and live there and be frugal their whole life. to me, that's not financial freedom. That's just, you're pinching your pennies at that point, and that's just not
Or
opinion.
you did reach financial freedom. You just are sacrificing a lot just for the sake of saying you don't have to work, right?
Exactly. And, also, I mean, when you become financially free, for a lot of people, if you don't enjoy what you're doing, it gives you the ability to do exactly what you enjoy. Luckily, I love selling real estate and I love real estate, so I'm going to do it till I die. But, it's going to be really nice when I get to the point where I can take time off, if I want to, or, I can take off time now, but it's just kind of like peace of mind.
Totally. So one of the things I've heard you talk a lot about is real estate syndication. What is that?
Yeah, so real estate syndication is, to put in basic terms, is you're raising capital for the down payment of the property. So I'll give you an example of that. So if you're buying a $10 million apartment complex and you need 30% down to cover the bank down payment and your reserves that you need and any origination fees. So you need about $3 million. So you do a syndication, you bring it to private investors, and you raise that $3 million. And it's typically in the form of a Regulation D, which is in the tax code, a 506 Schedule A, B, C, or D, and they all just mean a different variety of things. The ones that we specialize in are 506 Schedule Cs, which limits it to accredited investors. So we take on, anywhere from 5 to 50 investors that each invest, our minimum's 100,000. So let's say everyone invests 100,000. So we need 30 investors. So we get those 30 investors to invest, and then we get, to purchase the property, and then we get to manage the property and get also some of the profits in that.
Gotcha. So what does it take? I'm sure there's some licensing and stuff, but it sounds like it's essentially taking just the crowdfunding model, the Indiegogo or any of the other sites for my invention, idea, business, whatever, and you're applying that to real estate, and it's more regulated than some of the other crowdfunding ideas, I assume.
It's basically crowdfunding. If you want on Go Start and you created a new iPhone, and you wanted to raise money to bring your invention to light, it's similar to that. It's definitely a lot more regulated. You don't need licensing particularly, but what you do need is it's SEC registered. So you go through the SEC. It's like doing an IPO. It's more like doing an IPO for a company. So if we had, we're doing an IPO for Facebook and we released it to the general public and they could all invest into it, until the stocks sell out. It's kind of like that. It's more of an IPO. And people do actually treat it like an IPO, which is called a Regulation A. I don't know if you guys are familiar with Grant Cardone, but he just released a Regulation A, which means anyone can invest into it. You don't have to be accredited. It's $1,000 minimum. So it's very similar to an IPO. And on the flip side is, you are buying real estate with it, but you're also buying a share of stock in the company. So when we syndicate something, you're buying a share, and that share owns the real estate.
Gotcha. And so every time you do a syndication deal, you have to do the whole thing. It's building a business, bringing the funds in, purchasing the property with that business, and you guys as the real estate team or not the team, but the Cornerstone Investments, you guys are employees of that company or like Cornerstone Investments is an employee?
Yeah, so I'll tell you how it works. So we have the LLC, which owns the real estate company or owns the real estate asset, and then we have the general partnership and the limited partnership. So me, John, and John, and it depends on the area. We have other regional business partners as well that kind of help run the business in different markets. So we own the general partnership, and the general partnership owns 15% of the LLC right off the bat. And then the limited partnership owns 85% of the LLC, and that's where the investors go in there. So when I say 85-15, that's what people would consider the split. So we have an 85-15 split. And so the general partnership manages the entire project. We have the entire control over the project. We decide when we buy, sell, refinance, what maintenance goes in the project, what property management company we use. We get to manage, we own the project basically. And our investors trust us to do that because we're experienced and we're good at doing it. And that 85-15 split means that we get a 15% split technically for not putting anything into the project, even though we do. I invest pretty much all the money I make on the real estate sales side back into the company. So we invest into every single one of our projects along with our investors.
And so you could have the 15% of the business basically for the work that you're putting in, but you could also, if you wanted, as Anthony, be an investor as an individual. Is that correct?
Exactly. Yep. So the business will have 85, and that can change. Depending on the business. We can do 10%, we can do 20%. Some companies do 30-70 split, which is more common. You see with Grant Cardone, like Brandon Turner with bigger pockets. But yeah, exactly. So we'll get 15%, but then I can elect to buy as many shares as I want in the limited partnership side. If I want to invest 50 or 100 grand, I do, depending on our minimum. So
gotcha. That's awesome. So how many of these syndication deals did you say, 2 or 3 that you have started and completed? Or I guess they're not completed until a certain number of years later, correct?
Yeah, so I'll kind of tell you where we're at. So we had a 32 unit in Lolo, Montana, just below Missoula, that my business partner, John and John, they did before I really started on the team. And that was kind of the learning curve. They had some, advice on it. And then after that, they did a 54 unit, which is one that I was more involved with. They kind of, we partnered up there. And then from there, the one that I was fully involved with and really joined team and everything was a smaller project, and it was just a good opportunity, so we didn't want to pass it up. It was a 13 unit over in Redmond, Oregon. That one fully funded about a year ago, and it's going to be done. Actually, I was just looking at my emails. It's going to be done the end of this year and expects to be fully leased by January and cash flowing by the end of the month for our investors. And then from there, we raised for another 54 unit in Fort Grounds, Missoula. That one is currently under construction. Expected completion late next year, late to mid next year. And then right now we're raising for a 68 unit apartment complex also in Missoula. And that one we're about 70% raised on that. And we have the other 30% to go, and it's going quickly. We've raised that funds in about 10 to 12 days. So
nice. I'm assuming that you probably have some sort of criteria filtering system. As you guys, you can handle a certain amount of volume and just work with the team that you have. So I don't know if you've determined we want to do, 3 syndication deals this year or in the next 3 years or whatever it is. You have a number. How do you then go and after you determine how many you want to do, or is it the other way around? You're just kind of looking at all opportunities and then decide, can we squeeze this in this amount of time, or what? Walk me through where's the next syndication deal? What are in the funnel of trying to process where to go?
Yeah, so we have at least 3 other projects kind of lined up, and one of them might be a phased project. But yeah, when we were looking at projects at first last year and kind of earlier this year, it was like, okay, we want to fill this pipeline. So we started looking for property, and we found some. We passed on some. We're B-class workforce housing, so we want to build, B minus to B plus assets. That's where we sit, and that's where we want to be. We're not building Class A luxury, and we're not building, Class C and D stuff that's, kind of really low income stuff. We build Class B, and that's it. So basically this year we came up with a bunch of different projects, and we filled up the pipeline for the next year. We're going to be raising a lot of money. And so right now we're like, okay, let's slow down on new construction, and let's try to, kind of open up another side of the business, same business, but let's look at some already built stuff. So that's where we're at right now. We have some, whether it's partners or us 3, we're looking for some already built stuff, because it's, you do the work up front, you take it down, you don't have to manage the whole building process. But in the pipeline right now, we have a project up in Sandpoint, Idaho that we took down the land about a month ago. We have another project in Missoula, and then we have a project in Redmond, Oregon that's going to be about a 32 unit. That one's going to be early next year, and the Missoula one will probably be middle of summer, and then the Sandpoint one will most likely be late summer next year. All of them are going through permitting with the city right now. We either have control of the land or have an option to buy the land with the owner type idea. So yeah.
And with these deals, I'm a big fan of just big data and trying to find out ways to have computers do some of the work and analysis on ROI and estimates and stuff like that. And I'm loosely familiar when it comes to like looking at a rental property or, like a duplex or triplex or something. I've seen and worked through some spreadsheets myself on trying to guess, okay, this is the purchase price. What could I rent it for? And like all those types of predictions. But it sounds like what you're doing is that, but a little bit more in depth because you just got more numbers. And then you're also talking about construction costs and land costs and any other fees and stuff that are worked into there. Is that basically it? Or is there something else that I'm missing as far as like how you're able to identify good projects?
Yeah. So good project. I mean, zoning is the biggest thing, especially in the municipalities that we're in, especially Idaho. It's a lot of anti-growth people. There's been so much growth in some of these places that if the zoning isn't favorable when we buy it, we most likely won't buy it. It has to, get the amount of units on there that's going to make the project pencil. That's why we're so bullish on Missoula right now, is because they really allow building and they're pushing for higher density because they understand the need for it and they understand housing has gone up 37% in the last year. So that's a huge criteria. And then when we're modeling something, we have we've looked at so many different projects in the last year that I just know what's going to pencil and what's not. But some criteria we look for is, how much per door is the land? So if the land is, for instance, the Standpoint project, that one's under 10,000 a door for the land for the amount of units that we can build on it. Missoula is about 13 for one project and 20 for another. We just know those numbers are going to pencil depending on where they're at. If we have to remove a bunch of stuff, we're going to pay less for it. But if it's build ready, we're willing to pay 20, 25, maybe 30,000 a door because the zoning's favorable. The city's already, kind of preliminary approved it, then heck yeah, we can pay a little bit more. And then building costs. We're building in Redmond, we're building in Missoula, and we're building in Post Falls right now. So we have a great grasp on what it's costing. I mean, it's gone up like some sheetrock went up double in the last year. It's crazy. But we get to see that real time with our other projects, so we can anticipate it with the projects that are coming up. So we have pretty comprehensive models. We have a basic model that I can just throw stuff into, rough costs, and okay, this is going to be our cap rate and our cash on cash. So that's the most important thing, is how much cash on cash our investor is going to get. We typically shoot for anywhere from 9 to 12%, 8% if it really makes sense, but we want to get around that 10% mark. That's kind of everyone's dream number for the cash on cash. Cash on cash is when you say invest $100,000, you want to return $10,000 a year on that cash you put in there and have it go up every year because the project gains value and the rents go up. And then we want the cap rate, which is basically a bunch of expenditures taken together. And if you have we shoot for a 6.5 to 7.5 cap on buildup, and that's really good because the market's selling at a 5 cap, which means when we're done with the project, we're going to have an extra 20% equity in it. So we raise 30, 35%, we have an additional 20. Now we're going to have 50% equity in a project when it's done. And that gives us a really good debt to income ratio and a debt service payment.
I see. Okay. So there's another guy that I feel like I actually interviewed him a month or two ago. His name's Jason Adams, and he's really into business intelligence software. And I feel like I'm like very interested because he actually does real estate. He builds houses, so he owns a Arbor Homes, I think is the name of the company. But he actually is building houses. I wonder if he has done. I'm just thinking out loud. He would be a good person to pick his brain on what other data is he feeding into the system? Because I think it's crazy to start looking at publicly accessible data and properties that come out with listing prices and then immediately be able to pull in zoning information and all that stuff to just have it filter for you. Because I have to imagine that somebody is doing that. There's got to be some big investors that have very sophisticated ways to find the best deals first and jump on them when they can, Yeah,
a lot of them do. And a lot of them have these big models they can plug a lot of stuff into. We've worked with them. We do a lot of, on the residential and our brokerage side, we work with some pretty large investors. And yeah, they have some very sophisticated, but I mean, that'd be a great connection to have. And We use a software called Syndication Pro, which helps us manage everything, and that's a good spot. They give us some good data points. Another big thing we look at is that you said publicly known data is we only want to be in markets that have high appreciation, high growth, and jobs are coming there. So we feel the markets we're in, Coeur d'Alene, I was actually just looking at this morning, has grown almost 25% in the last 10 years.
Wow.
And it's expected to go up like 30 or 40% over the next 10 years. So that's the market we want to be in. And same goes for Missoula and same goes for Redmond, Oregon.
That's awesome. So I'm assuming that so you have, I'm thinking about this from the perspective of someone that maybe doesn't have cash to invest, but has skills. You have the real estate knowledge and I guess light legal skills to understand how contracts and things are going to work. What other skills or resources, I'm assuming someone that literally can't, is a construction home builder, that might be someone that would be able to get into a syndication type deal without cash. Is there any, and is that true, first of all? And is there any other skill sets that are heavily utilized for trading your time for equity, basically?
Yeah, I mean, really all it is, time for equity is, we're making the offer, we're putting everything together, we put the investors, we put the deal together, but the biggest thing is finding the deal. If you can find a deal, you're going to find investors as long as the deal makes sense. If you find in a world of what we call 5 caps and you find a 7 cap, someone's going to jump all over that and love to be a partner with you. And that goes into, if you're thinking about syndication, you really need a partner. So I have John and John Senior as my partners. And so when you go to get a bank loan, they look at your rap sheet, what your experience is, what are your current assets, basically they're trying to protect themselves because they don't want to take the property back if you default because you don't know how to manage the project. So my first piece of advice would be, you're willing to do the sweat equity, you're willing to do this, that, and the other. If you can find a partner that's willing to partner with you and either sign on the loan docs or be on the loan docs with you, and you give them also some of that equity, say it's a 85-15, you offer them 5% for doing nothing and they'll sign with you. And they also take a personal guarantee, but they, can almost help you as well. Hopefully they're experienced in real estate. That'd be my biggest piece of advice because really it's not possible. If you go to the bank and you have zero experience, they're probably going to turn you down, and you could look at raising 100% of the capital for it, but that's also pretty tough. And then on part of that, finding a phenomenal attorney, a phenomenal bookkeeper, and a phenomenal CPA are just as important as running the business. So we found a gentleman who specializes in real estate, has done, syndications before, and he's our attorney, and he does a great job. Second, a CPA that understands, how it can get you tax breaks, how the depreciation works, all that stuff. And then a bookkeeper. My bookkeeper does everything for me. I send her all my invoices, everything. She has access to my bank records, accounts, everything. And she just makes my life on the financial side very, very nice. And it's not that I'm very good financially, but it's all the tedious things like, recording documents, making sure invoices get paid, and also documenting those invoices when they do get paid. So that'd be my biggest piece of advice. But, once you find a partner in a deal, the rest is, I wouldn't say it's easy, but it kind of comes together because a good deal in today's market is the most meaningful thing and very hard to find.
Yeah, it sounds like one of the things I want to dive into you just mentioned is the tax breaks and things. And my understanding, their opportunity zones is an opportunity for basically leveraging government programs to either reduce the overall costs or increase the return on a given investment. Is that correct?
Yeah, absolutely. So arguably one of the best tax benefits there are in history. There's 1031 exchanges, which are phenomenal, but they defer taxes. Opportunity zones they came out in 2017, they were passed. And what it was is the government wanted to get private money into areas that were underperforming. So if the area had lower than the median income, then they could be designated as an opportunity zone. A lot of municipalities didn't take any advantage of it, and they got the letter and they threw it in the garbage because why deal with another government entity when they don't need to? But some areas did. So Post Falls, where we're building, did. Missoula, part of it. There's a little area in Missoula that did, and one of our projects that's coming up next year is in an opportunity zone. And then in Redmond, Oregon is also an opportunity zone. And so what it is say you have a taxable gain on anything. It can be a classic car, stocks, cryptocurrency, real estate, a watch, anything you have capital gains on. You can invest into an opportunity fund, which then can invest into an opportunity zone. And what the opportunity zone does is you're still going to pay taxes. So in this current increment, they have 10-year increments. So this current increment is year 2027. You will, or 2026, sorry. You will pay taxes on that gain with a slight step up in basis and some debt forgiveness if you have debt on it, specifically if you're exchanging real estate into it. And then you pay your taxes, you're good to go. You're still cash flowing that whole time, and you're going to continue to cash flowing until you hit year 10. You can sell or you can keep on holding it. We're long-term investors, so we plan to hold these forever. But if you do elect, we elect as the investor group to sell that product after 10 years. All the new gains are completely tax-free. So for example, say you invest $100,000 into an opportunity zone and your basis was $50,000, and then year 2026 you have that.
What does the basis mean?
The basis is the original investment. So if you say you bought a classic car for 50 grand and sold it for 100 grand. You have your basis, which is the 50 grand you invested, and you have the $100,000 gain. You invest that into an opportunity zone, and now at year 2026, you get a step up in basis of 10% typically, and it can change. So now your basis is $55,000. Now you're paying $45,000. You have a tax on that. Let's just say it's 20%. You have that 20% saved away, so you pay that. So now you're keeping the $100,000 in the investment. Now at year 10, arguably real estate doubles over 10 years, sometimes less, sometimes 37% in 1 year, like it did last year. But let's just say it doubled. Now your new gain is $200,000, but it's not really a gain. Now we can sell the asset, and you can take that $200,000 and put it in your pocket tax-free. And there's really nothing else that does that. You can't invest in the stock market and get tax-free money out. It's just always going to be taxed. There's certain things like 401ks and stuff that will help you get away from taxes, but nothing that's completely tax-free. So we have a lot of people, that have stock money. They've made tons of money over the last year. Tesla stock's gone up 1,000%. And one of our investors had a lot of money from that, and he said, Anthony, I want a cash flow. So they take it out and they invest it into one of our projects, and now they're cash flowing. And this was specifically in our Montana one, and they're going to see a 10% or more cash on cash return. So now their $100,000 investment that turned into it was like 500 grand or something like that. Now they're going to not only get the benefits of taxes from real estate, they're going to get the opportunity zone, and they're going to cash flow 10% a year or more on it as time goes on. So now they're going to make 50 grand a year passively, and they're pretty happy about it. So,
and then they would get, I'm just sure that's crazy. It is, you should be like, wow, that doesn't seem real, because you're saying that there's nothing else like this that's ever happened before as far as the opportunity to avoid taxes on something like that of that scale.
Yeah, nothing to this, to this kind of level. Not really has the government given a good opportunity to just take stocks or, whatever other gain it is and put it directly into real estate. It's one of the best ways to get anything outside of real estate into real estate and cash flowing. The closest thing to it would be the 1031 exchange, which you can sell a house for, sell a house for 300 grand. You can 1031 exchange that whole amount plus the gains into a like kind. So you can go buy a $350,000 house and exchange it. And that's what a lot of investors do, is they have a capital stack. So they buy a single family, then they sell it in 1031 into a duplex. They sell it in 1031 to a fourplex, then an eightplex. And that's how a lot of investors build their portfolio, which is great. It's great until you have, when you're older and you have this huge portfolio and you're going to die or, whatever. Right now, you have a great, you can put it in a trust, and if you die, you get inheritance. It goes up to the market level, which is phenomenal. Or, if you have a certain amount of wealth, like I think it's like 11 million as a single, you'll get taxed above that. Or the government changes it, which is probably going to happen, would be my bet. And so now if you say that you have all this stuff, you started a $200,000 single family all the way up into a $10 million apartment building, you have all this debt forgiveness that's tracking up on you, all this gain. And if you sell that $10 million project and you don't 1031 it, or you die and your family has to sell it and they have to pay it, they're going to lose. I mean, I've seen people lose 50, 60, 70% of the gain that they have because it just had so many years of stackable taxes that they just kept on deferring. So this is a really good way to get rid of that.
That's the big difference, is that the 1031 allows you to defer it until a later point when you ultimately decide to sell and not transfer it. And this, you're saying that you just get taxed on the original gain. Is that correct? At the end of year 1 or 10? What was that?
Year 10. So if you sell it 10 plus years, and there's a couple other caveats. So you can't just buy a house in an opportunity zone and take advantage. It has to be new construction, or you have to double the value of an already existing building. So if you buy a house for $100,000 and you do a full remodel and make it worth $250,000, you can qualify. But if you just go buy a brand new house and think you're going to qualify, you won't. It has to be new construction that you've built yourself. You can't buy new construction from someone else either. And again, there are some stuff your attorney can do. Everything in the tax code is about loopholes. There are some loopholes you might be able to take advantage different ways, but we're very much just building new construction in there. So that's what we focus on.
Awesome. So last thing I'm thinking about with opportunity zones, is this like you mentioned Redmond, Oregon? We actually, my wife and I are selling our rental property that we had in Redmond. And what is that, like all of Redmond is an opportunity zone, or it's like, on the east side of the tracks in this little 2-block radius, that's an opportunity zone? Like, exactly. How specific is it?
Yeah, it's not all of Redmond. So if you go into one I use is opportunitydb.com, and it'll show you exactly where in Redmond. It's a good portion of Redmond, and that's why there's a lot of growth happening in Redmond, but it's not the whole it's not the whole city. And same goes for Post Falls. Post Falls, it's a very small section between, if you're familiar with Spokane to Greens Ferry, 90 and the river. So it's just a small section. And if you go to these areas, you're going to see a lot of growth there because investors are really starting to understand the benefits of it. Like I said, it's only a 4-year-old program. So a lot of these big institutional people, they understand it, but they don't really get into it for a couple of years until they fully understand it. So now we're getting to the full steam of it getting a lot of attention nationwide. And there's awesome. About 9,000 nationwide. So they're all over. They're in every state. They're just all over the place.
That's crazy. I had never heard of that. That's something that I'm going to have to look more into. What is last question on real estate? I guess I'll ask you, is there any other topics or things that you feel are most surprising or that you're optimistic about or looking forward to in the coming years in anything that we're talking about?
Yeah. So I'll talk about first, looking at my business, and then maybe what I'm just interested in. I think it's a great opportunity for real estate investors. I think multifamily is a great investment. I listen to a lot of podcasts from a lot of people that are in the industry. Specifically, I listened to the Millionaire Tribe this morning, and the owner of McKinley, who has 20,000 units, was talking about they're still buying. They're still so bullish on it. There's a lot of government, stuff coming to multifamily. If you guys are familiar with Robert Kiyosaki with Rich Dad Poor Dad, they're thinking that a $500 to $1,000 monthly stipend is going to start coming to people to pay for housing. So I'm extremely bullish on multifamily. I think right now there's at least a 10-year bull run on multifamily where I'm just going to continue to build it, buy it, acquire it any way I can. In good markets, I'm not going to buy in bad markets. I'm going to buy in good markets. And then prospectively looking, I think there's a huge opportunity with COVID in some of these markets that I was just down in Phoenix, where some of the stuff hasn't come back, office buildings, there's still people working from home. I think there's a huge opportunity for people to buy office buildings, convert them to residential or to restaurant space, or to buy them and get them new leases in there. There's still tons of businesses that are starting, buy them, try to get out of the lease with their current tenant, and then release them. I was recently listening to a podcast where a guy bought a big commercial project. It was 40,000 square feet of commercial and office, and then a Walgreens type building. And he bought it all for $20 million. He split off the Walgreens onto its own, and then he released it at a higher price, and then we sold it for $21 million. So now he has 40,000 square feet of additional space for free. So I think that's a huge opportunity in this market. That's the cool thing about real estate is whether the market's going up or down, there's always different opportunities in the different categories. So if you look at back in '08, multifamily was doing exceptional in '08, so probably wasn't the best time to buy it. But, a lot of commercial tenants and businesses were going out, so it was a great time to buy that stuff. So, and then, multifamily, every category kind of goes up and down. So if you can take advantage of the different times of, the market, then you're going to do well.
So it's not, it's not like the entire real estate investment market is down. It's just residential is down, and that means that X and Y are up because of that, or vice versa.
Yeah. Exactly. So when most people were doing poorly in '08 with real estate, my business partner had, B-class multifamily, and his rents continued to go up, and he did better. Some of his other businesses he was in, did poorly, but his base, foundational business of owning multifamily did better. So it's kind of, I think that's really what's made a huge bull run, because people saw that in '08, and a lot of people have been acquiring multifamily for those reasons. It's a super good hedge against inflation and market dips, because people can't afford a house, they're renting. If people are losing their houses, they're renting. So it's kind of a win-win situation.
That's what would cause multifamily to dip. What I'm sure that people are monitoring, what would be the time where you'd start to get concerned about investing in multifamily?
Yeah, so if multifamily ever, the rents go up so much that they're pretty even with what a mortgage would cost. So currently in our market, in Coeur d'Alene, the average price is $460,000. And so your mortgage is looking at, if you put 10% down, you're looking at $2,200 to $2,500 mortgage. Whereas, if you go rent a 3.2 or a 2.2, your mortgage, your rent's anywhere from $14,000 to $2,000, depending on how nice you want. But the average rent I was actually looking at is about $1,500 a month in Coeur d'Alene. So you still have this $700 a month gap between them. If that ever shrunk to be the same, I think we'd be in pretty big trouble. And then also market driven. So, a lot of these places, take, Chicago, when people started just leaving the area, and if you have a mass exodus from one of your locations, whether it's politically, whether it's, due to contamination, someone finds something, whatever it is, that's a huge negative. Of course, if people are leaving your area, then I would sell my assets as quickly as possible and get into a new market.
And that's so basically when the cost of houses dips so that the mortgage payment is equivalent to a rental payment, that's when the multifamily would decrease.
Exactly.
And the housing market would increase.
Exactly. Or vice versa, housing kind of levels out, which it could do here coming up. We just don't know. But rents continue to rise and they meet it. Then it's kind of like, well, it just deters people from renting when you can go buy a house for the same price. And
gotcha.
There's supply issues right now, which, is another category, but that's the rent-to-own gap, or the affordability gap is what you call it, is a super big indicator for us. We tell investors we like to be, $500 to $1,000 a month difference between the average rent and the average mortgage payment.
That's a good metric. That's interesting I love those things of just like boiling it down to like you said, if I'm buying a piece of land, how many doors can I put on it? To purchase this land, what's the cost per door, or what was the phrase you said?
Yeah, cost per door. That's
cost
the biggest,
per door.
One of the biggest indicators for us. There's projects, they're selling for $191 a door in our area. And if we can build them at $160 a door, or, average between all of them $160 a door, then we're doing well. That's going to cash flow well, and that's going to give us what we want. And we can just kind of tell that. Honestly, I've just been doing it so much, I can just look at a project.
Yeah, see immediately, is it close? Yeah.
Yeah. And then if it's close, then I'll model it. And we have some pretty intricate models. We use real data for a lot of our models. It's very intricate, and you do have to pay for their models, but saves us a lot of time from building these Excel models. And Excel models take a long time to build.
Yeah, totally. Awesome. Well, got a couple wrap-up questions for you. I'm curious, what is so you've talked about financial freedom and trying to get to that level. What is, and you can kind of go into as much detail as you want, but what is success? Is there a number? I guess there's a number of different follow-ups that I have, but is there like a number amount that you want to reach financially that's like, I've reached success financially and now I'm going to go on to success the next level of that or whatever. But what is like Anthony's goal right now? Where are you going, or what are you trying to accomplish?
Yeah. So a few different things. I mean, my goal, when I first started, I was like, man, I'd love to have 1,000 units. And that was kind of like, that was big. But then I was, rethinking about it when John and I really joined forces, and we were, 1,000 units. And we're like, you know what? We need to think bigger. So our current goal is $10,000. We want to have equity in and asset manage 10,000 apartment units across the West and in good markets, of course. That's the current goal. And then that's going to obviously bring me financial freedom, which is a big part of success to me. And then another big part of success is doing exactly what I want every day. So, right now I'm building businesses and I love it. So I do what I want, but I also want to continue to do what I love and what makes me happy every day. And then, also hire people. We want to have a whole team under us. We're all about automate, dominate. So we want to have people that work under us. We want to have tech products that automate stuff for us. So when John and I both, John's married, I have a girlfriend, a long-term girlfriend. We want to start families, have kids, raise our kids, go to their football games, go to their volleyball games, whatever it is. We want to be there for them, raise phenomenal children. So that's a big part of success to us, is building our businesses to cater to our lifestyles.
That's awesome. What is vacation for you? What does that look like?
Yeah, I love traveling. So me and my girlfriend, we have a lot of ambition. We're going to Amsterdam actually in June, and we just try to travel a lot. I've actually never been to the East Coast, so another trip we're planning is just, even if it's a weekend trip, I just want to get out and experience the world. And so that's really a vacation to me, is if I'm not working, I want to be either spending time with, friends and family, but really just traveling. I want to go, even if it's a 6-hour trip up to Glacier National Park or, that stuff. I just want to be experiencing the world. And that's currently what it is. That's
awesome. What is something that not many people know about you?
Good question. I'm a pretty transparent and open book. That's a good question. I'm a pretty homely person. Like when I love traveling, but every time I travel, I'm like, man, I miss home, because I really do love Coeur d'Alene and the friends that I surround myself and my family. So whenever I travel, the first couple of days, it's kind of like a little uneasy. I'm like, not like it's bad, but I'm like, gosh, home is just nice, your own bed. But I push myself out of that comfort zone all the time. But that's kind of a little funny thing.
That is funny. All right, so recommendations now. I'm interested in favorite books. You could do 1, 2, 3 books, whatever makes sense there, and then movie recommendation. You only get one movie recommendation, but you could do as many books as you feel necessary.
Yeah, so books, I try to read a decent amount of books. I wish I would read them more. Another best part about traveling is it gives you time to read on the plane. That's where I get most of my reading done. But of course, Rich Dad, Poor Dad was what got me obsessed with real estate. That's kind of what drove my passion, the idea of financial freedom, your money working for it. That's hands down still the best book I've read. I've read it 3 or 4 times now. Another great one that I read this year was a book by Tim Grover, not real estate related at all. It's called Winning, and it's just, what it takes to win. It goes into Michael Jordan's life and Kobe and what they went through to win. And I think that winning is the ultimate goal. I think everyone has the passion to win, and you have to kind of set your parameters around what winning looks like to you and how to achieve that. And so that was a really good eye-opening book for me. And then another book I'm actually about halfway done with right now is Traction, and it's phenomenal so far. It's based on the entrepreneurial operating system and running businesses, and it's really, you can take it to any business. I read a lot of books that are not real estate related, so I can bring those philosophies into real estate. But those are the 3 books that I've made a big impact. Rich Dad, Poor Dad, it's been an impact for probably since I read it 6 or 7 years ago, and those 2 have made really big recent impacts on me and kind of, make you change a slight direction in your business and your life to just help you achieve different things.
Totally.
And then movies, I'm more of a show guy, so I'm going to switch. I think Game of Thrones is the best show out there, so I still think that Game of Thrones is awesome.
That's awesome.
That's the nerd side of me.
Yeah. What is the best way for people to get in touch with you if someone wants to connect?
Yeah, so I'm on Instagram, Anthony Walker 18. I haven't been growing my social presence as much as I wanted to since I started the business, other than paid advertising. But that's one of my goals, is really diving deep into my social. So Anthony Walker 18. I'm on LinkedIn at Anthony Walker. And then I'm actually going to start a YouTube channel. So I bought all the gear to start a YouTube channel. So that'll get started here shortly. I'm learning how to video edit as we speak. And those are probably going to be the three best places.
That's awesome. Well, I really appreciate this little mini education session that you gave me on real estate. I'm fascinated about this. I love investing, and appreciate you taking the time to talk today.
Absolutely. It's a great thing. I advise real estate for anyone. Diversify your portfolio into it.